You can analyze pull rates. You can track early pre-orders. You can debate whether the chase card is iconic enough. But before I buy a single booster box of any Pokemon set, I wait for one signal. Just one. And if it's not there, then I don't touch it. I don't care how hyped it is. I don't care what influencers are saying about it. And I don't care how good the card art looks. But most modern Pokemon sets don't fail because they're bad. They fail because demand wasn't real. And if you don't know how to measure real demand before you buy in, you're gambling. Today, I'm going to show you the exact signal I watch, how to measure it, and how it would have saved you from overpaying on multiple recent sets. And once you see it, you won't be able to unsee it. Most people think that the signal I'm about to reveal has something to do with price. It doesn't. So naturally, their next guess is going to be pull rates, and it's not. Then they're going to think it's PSA pop growth. That's part of the story, but it's not the signal. The signal I watch is unforced secondary market liquidity before release. And yes, I am going to explain this. Before a set officially releases, there's a period where distributors ship product early. Breaks start happening overseas. Influencers are getting early access to the product, and we start seeing singles appear on the secondary market. This is where the truth leaks out. Not YouTube hype, not thumbnail hype, but actual buying behavior. And I don't care how loud the marketing is. If buyers aren't aggressively absorbing singles at real prices before mass release, that tells me something very important. It tells me that demand for that set is shallow. Now let's define liquidity. Liquidity simply means how easily a product can be bought or sold without crushing its price. If 50 copies of a chase card hit the market and sell at strong prices within hours, that's liquidity. If 50 copies of a chase card hit the market and sit, and then buyers keep undercutting each other, and prices slide 15 to 20% in the first 2 days, that's weak liquidity. And weak liquidity before release for any modern Pokemon set is a real red flag. A set can trend on Twitter, on TikTok, or on YouTube, but if the real money isn't stepping in early, then that tells you that demand is mostly content-driven and not capital-driven. And content-driven demand fades, while capital-driven demand compounds. And as we all know, Pokemon is not a stock market. It's a collectibles market. And collectibles markets, they behave differently. With stocks, liquidity is constant. In collectibles, liquidity is emotional. And emotional liquidity, it disappears fast. Let's look at recent history. There have been multiple modern sets where pre-release hype was extreme. And you don't even have to go back that far to see examples of this. I'm talking about Destined Rivals, Black Bolt and White Flare, Mega Evolutions, and definitely Phantasmal Flames. Chase cards from these sets were declared future grails. Pre-orders for these sets sold out instantly. But what happened when singles actually started hitting the open market? Those future grails, they didn't move aggressively. Prices for a lot of those cards started sliding before the release date even hit. And that is your warning. Because here's what happens. When early breakers open the product and flood the market, you get your first real stress test. If buyers start absorbing that supply easily, then the price holds. If buyers hesitate, then price falls. And when price falls before mass retail inventory even hits, then that usually means that supply is going to outpace demand when this product hits the shelves. Let me break this into a simple framework. Step 1, early copies hit the market. Step 2, sellers list aggressively at hype prices. Step 3, buyers either absorb or they resist. If absorption happens quickly at high prices, that's a green light. If resistance happens and prices start stair-stepping downward, that's a yellow light. And if you see rapid undercutting and heavy relisting, that is a red light. And most investors don't watch this. They wait and see how the internet reacts to a set. And by then, it's too late. Let me give you a hypothetical example. Imagine a new set drops with a massive Charizard chase card. Okay, so you don't really have to imagine that one too hard because I'm talking about Phantasmal Flames. Everyone everywhere was calling the Mega Charizard X EX Special Illustration Rare one of the top 5 modern cards to be printed. Pre-orders for Phantasmal Flames booster boxes started close to $350 a box. When day 1 and 2 hit, 4 copies of this Charizard sold on TCG Player for right at $1,000. Day 3 hits, and you see that same card drop 30% to around $700. And after a week goes by, the card starts selling for between $550 and $600. So in 1 week, you see almost a 50% reduction on the price of that card. So what just happened? Liquidity failed. There weren't enough real buyers at the hype price. And when liquidity fails before release and 1 week after, sealed product gets repriced downward shortly after. Because sealed value ultimately ties back to singles value. Now imagine you bought a booster case of Phantasmal Flames during pre-order or shortly after release at close to $350 a box. You're over $2,000 in at this point, and your cost basis is high. Singles are sliding. Breakers stop breaking as aggressively, then retail supply hits, and the Phantasmal Flames booster boxes then settle to around $200 to $250 per booster box for the next few months. That's how capital gets trapped, not because the set was bad, but because early liquidity was weak. Here's how I actually measure this in real time. First, I track the sell-through rate. Not listings, but sold listings. How many copies are listed versus how many are actually selling per day. And all of that you can track really easy on TCG Player. If 40 cards get listed and 5 get sold, then that's weak absorption. The next thing I do is track price stability over a 72-hour window. If prices hold within 5%, that's healthy. If prices drop 20% or more the day before release or the day after, then that's a big structural warning. The third thing that I'm watching for is relisting behavior. Are the same sellers relisting the cards with a lower price every few hours? If they are, then that tells me that those sellers expected faster movement. And the last thing I look for are early PSA submissions. If flippers rush to grade immediately, it usually means that they don't expect raw value to hold. And that's another subtle tell. This entire process takes maybe 30 minutes a day, but it prevents thousands in mistakes. So the signal that I look for, it doesn't predict long-term greatness. A set can still have weak early liquidity and then become a very strong set later on. But I'm not trying to predict 2032. I'm trying to avoid tying up capital inefficiently in 2026. And this is the key difference between collectors and investors. Collectors buy what they love. Investors buy where liquidity confirms demand. If the signal isn't there, I wait. I let the set prove itself. Because there is no rule that says that you have to buy a set on the release day. It is more fun, but that's not what we're looking at today. Some of the best entries in modern Pokemon come 6 to 12 months later. Patience isn't passive, it's strategic positioning. Here's why this works psychologically. Hype creates expectation, and expectation influences pricing. But real money only moves when buyer confidence exists. And early buyers reveal that confidence. If they step in aggressively, it means that card hit an emotional nerve. And if they hesitate, it means that excitement was just surface level. And surface level excitement fades fast. And confidence, it's always compounding. Liquidity is confidence made visible, and that's the entire thesis of this video. So before you buy your next Pokemon set, ignore thumbnails, ignore influencer excitement, and ignore pre-order sellouts. Watch liquidity, absorption, undercutting, and if the market absorbs supply confidently before release. That's your signal. If it doesn't, wait. Because in Pokemon investing, you don't get paid for being early. You get paid for being right. And this one signal has kept me out of more bad buys than any pricing chart ever could. If you want more analysis like this, like and subscribe, and we'll see you guys in the next one. Bye.